Hello everybody, happy Monday. Welcome to the Trader Merlin Show. Hope you had a great trading session out there. Of course, the talk of the day is, of course, cryptocurrencies, a little bit about what happened in the markets as most of the indexes were down. And I wish you guys a happy Monday. Hello, Terry, Ryan, Les, Tomasina, Gary. Got Jerry as well. Wow, Max World of New York City. It's crazy out there right now. I'm trying not to even leave my house given all the weirdness that's going on right now. Big Ab, Alex as well, Jorge, Richard, and of course we got Mr. Cape Canaveral, Les Gold with us today. Alex, I will get to your question here on institutional buying here as we progress. I want to make sure I get through some of these questions that were sent in over the weekend, so I'll start there. Actually, you know what? No, I'm not going to start there. I'm going to start with, I made these graphics up. There we go. There's the market update. How about we do a little market update? We haven't done that in quite some time. We'll start off by just looking at what's going on out there in the marketplace today because, of course, the cryptocurrency thing, but the equity markets were interesting as well. Kind of figured there'd be a little bit more selling given all the bizarre political stuff that's going on in the world right now. So let's start off with the bottom of the list here, which is going to be Bitcoin. Of course, we all know what goes up must come down. Was expecting a pullback and got one. I actually did buy back in today into some Bitcoin. So for those of you thinking I bailed on my positions, no, I'm adding to them because my horizon on this is very long term. I'm looking much further down the road than I think most people are. So for me, it was a decent point to add to my position on Bitcoin. Bought it in at 32,000. So here's your Bitcoin for the day. This is, a bit concerning for, anybody that holds a position in something like this that moves that much. We hit, almost 42,000. I don't know what the futures hit. Futures might have been higher. Futures hit a high of 42,730, and we fell to a low today down around 31,000. So you're looking at a significant drop in the price of Bitcoin. But again, overall, it's still up and up and up and up. So I think it's actually a good thing for Bitcoin to have a little bit of a pullback, people taking profit, that's natural. This obviously followed suit with a lot of the other cryptocurrencies, most of them down about 30% in the last 24 hours. So pretty significant sell-off, but I think as most of the crypto fans like I am, that's just a buying opportunity. Of course, now what some people are saying with the crypto space is, it was, hey, target's 146,000, and now all of a sudden the tone has flipped to, they could go to zero. And the truth is they absolutely could go to zero. There is no doubt about it. They could be zero tomorrow morning, but the odds of that happening, I think, are very, very slim. For that to happen to that extent, it would have to break the algorithm that is the backbone of the security of Bitcoin in particular. Each one has a whole bunch of different algorithms they're using, but I don't think you're going to zero. Again, it's about risk management. If you're fearful of it, then just stay out. That's the simple answer there. All right, let's go back to number 6 on the list, NASDAQ taking a bit of a drubbing today. Thank you, Mr. Tesla. Tesla almost down about 8% today. And honestly, I think that thing needs to be down a lot more. And I'll talk about that here in just a second. So we have NASDAQ down 1.46%. Technically, there's nothing really noteworthy from it. Obviously, we've just been ripping through high after high after high. You just have a down day that erased all of Friday's session. So nothing that big here with regards to NASDAQ other than the percentage decline. S&P, you're looking at a similar picture, right? Nice big red candle there. But, just erasing Friday's gains. Nothing overly dramatic. Now we'll go to the 10-year. Now, remember the 10-year, this is the 10-year note. It's important because this is what your mortgages and a lot of rates are based off of. So as this number here you see declining, that means that the prices are rising. We do have a bond auction this week. I believe the 10-year bond auction is tomorrow, and then on Wednesday you get the 30-year. Remember, the Treasury has to dump more and more and more. They're selling record amounts of 10-year Treasury notes. Why? Because the debt has gone up trillions of dollars just in the past year. They need to find a way to service that debt and pay the interest on that debt. Therefore, they're now issuing bonds that are going to have to command a higher yield because as you flood the market with one product, nobody wants it. You're going to have to entice them to buy it, right? So say, for example, the brand new pair of sneakers come out from Kanye West. I wouldn't buy them. I think that guy just deserves to fall off the face of the planet. But anyway, Kanye West comes out with his new line of shoes, and there is good demand for those, right? What they'll do is they'll raise those prices or cut supply because they want to really drive the prices up and create a hysteria. If nobody buys those shoes, what do they have to do? they have to entice you to buy them. They'll drop prices, buy one, get one free today only. They'll do the same thing with treasuries. These bond yields are going to have to offer you more to buy it, right? So rates will be going up. And this big drop we saw here today was a good example of that. Or actually, not today. This is over the past week. You've seen that spike in yields over 1% now. Remember, we were at 50 basis points about a year ago. So all of a sudden, we get this nice drop in the price of bonds, which means yields are rising, about drop of 0.25% today. All right, crude oil will continue on here, our top three. Crude oil continuing to move. You guys might remember back in June, July, my target for this thing was 48. Well, we hit 48 and then just ripped right through it. Now you're looking at getting close to about 54 would be my next target before we really start to move to the upside. 52.18 is where crude oil is trading at right now. It's actually a decline today of 0.11%, but boy, last week was just a beautiful week for crude oil. Now, the one that will not die, that's the Russell 2000. Just does nothing but go up. It was down most of the session, then all of a sudden just peaked its head into positive territory, finishing the day at 2,090, a gain of 0.03%. So just barely to the upside, but it was the only index out there that's positive. The chart is absolutely a thing of beauty. Now, gold. Here's one that had a significant slide over the past few days. Even though the candle is red, that's because of a gap up on the rollover on futures. Gold was up today 0.46%, taking your top spot and number one. And okay, there it goes. I appease the masses because I know some of you have been asking me to do the market analysis. Technically, there isn't really anything on those charts that is overly noteworthy. The only thing from a technical pattern would be the bounce today in gold. Could have probably predicted that one based off of the demand zone, and we'll talk maybe more about supply and demands. But you guys can see that there was this area where it's rallied up, sold off, formed a small base, and then rallied out of it. And that's, of course, right where we hit at today on gold. So nice bounce point there for gold. The next one I would have been eyeballing would be a little bit further down here, about 1780. All right. Big buy on gold. Yeah, I think it is a buy on the long term. All right. No politics in here, guys. Patrick says, is not the Fed buying all these bonds anyway? Yes. Not all of them, but they're having to cover it. So remember, the Treasury now has to come up and pay all this interest on the debt, which again has gone up to about $27 trillion, right? I got the number. There's a U.S. debt clock, which is absolutely fantastic. If you guys really want to be embarrassed and saddened beyond what's going on politically in America right now, because if you're not sad and upset about what's going on in the world right now, I don't know, it's absolutely horrible. Let me go to it's debtclock.com, I think. It's just a fabulous video. usdebtclock.org. I'll bring that up for you guys to check out here. We're at $27 trillion worth of debt right now. The interest on that debt is $392 billion in interest. That's what we owe in interest right now. Pretty remarkable. So this number is just spiking up. They're going to have to sell a lot more 10 years to service this debt. And yes, the Treasury is buying most of it. Remember, we had two major buyers, which were China and Japan, and they've all kind of backed off and said, you know what, we're just not buying anymore. That hurts, and it puts a lot more pressure on the Fed to buy those things. It's kind of weird to me personally, because here you have kind of the drug dealer getting high off their own supply. That's a recipe for disaster. Everybody knows that. You don't get high off your own supply. And here you are seeing the Fed just buy anything that the Treasury throws out there with an unlimited checkbook. For now, it's working. I don't know what the long-term prognosis for that is. To me, it can't work permanently. I know Brendan's in here today, and he's always pounding the table of the Fed is trash, the Fed is junk, and fiat currency is junk. Well, we're seeing that more and more. I mean, that dollar index has just been on a southbound train for quite some time. And that may not change if they keep on printing this money. We've had a bounce in the dollar index over the past couple days, but still I think that major trajectory is going to be to the south side. All right, what else we got here? Cool. Oh gosh, let's not go there. It says World War III is the only thing I can think of now to reduce debt. Let's hopefully not get to that point. I don't think it'll be a world war. Honestly, at this point, it feels like we are more on the verge of a civil war in the United States. I hope that it doesn't come to that. Hopefully, cooler heads will prevail and people realize that we've been overly manipulated by politicians, and no civil wars. Anyway, don't want to go political. Let's go back to the topic du jour, which is trading Q&A. Now, I'm going to go through a few here, and then I'll get back to Alex had one on institutional buying and how can we spot them. Let's talk about Q&A. First one was from Ethan. He says, how do you use PE ration to help with investment decisions? The honest answer for me is I do not use them for investment decisions. It's not a long-term thing for me. If anything, it's a warning sign. Now, PE ratios can be easily manipulated, right? Of course, most PE ratios are looking at trailing 12 months. So you're going back historically quite some time and saying how much did they earn and then what's our current price, and then we have our formula. So the question is, what is normal, right? Is if you look at the historical average for the S&P 500, it's between 15 and 18 is the historical average. Does that mean if a company has a PE ratio of 50 that they're extremely overvalued? No, not necessarily. They may have something in the pipe. It could be a drug company that's working on a COVID vaccine, and they got a real high PE ratio because people are knowing that vaccine is going to be in super demand. And those are kind of growth companies. You see that with Amazon. You saw it with Tesla. Maybe not Amazon as much anymore, but used to be an incredibly high PE ratio. Amazon used to have a PE ratio in the hundreds, multiple hundreds. And we think the average is between 15 and 18. Wow, that seemed ridiculous. Like, who would pay that? Well, look where Amazon is today. Let me show you a chart here real quick of the S&P 500. And I mentioned that I don't use it from an investment perspective on individual securities. What I do look at is how is it based off its historical norm. Now, the only thing that I know from a historical norm perspective is what that S&P 500 is doing. For those that don't know what PE ratio is, it's just price to earnings. It's taking your share price and dividing it by the earnings that company is producing per share. Of course, again, we could manipulate that by changing the number of shares available, which is why I don't like it. Anyway, you guys can see this crazy spike here in 2009 in PE ratios. This is where you get outliers in market crashes. We have one kind of starting off right now as well. We're at 38.29 right now. Look historically, maybe this is the new normal, but we should be somewhere around 20 if in my mind, right? I do think we should be right. So I think personally that the overall equity market, the S&P 500, is overvalued based off of that PE ratio. Now, it's certainly not enough to make me just go out there and short the markets like crazy. It's more about understanding the big picture, but this would tell me that things are kind of overbought right now in the equity markets. Now, let's go look at another example. I think I actually had it up here on the other screen, so bear with me. I'm flipping through multiple screens here, and it's not that one. Oh, boy, where did I put that one? The perils of having so many damn screens. There we go. Okay, so let's go over here, and I brought up Tesla just to put it into perspective. So as I mentioned, when you have a growth company, when people feel that the prognosis for that company is really good, it's going to be considered a growth company and their PE ratios will be high. For some people, 100 might be high. For some people, 300 might be high. But look at the PE ratio on Tesla. PE ratio right now on Tesla, and I'll highlight here on the screen, is 1,550. Basically, what they're pricing in here is that Tesla is now going to cure cancer, create a direct superhighway to Mars, and link all cities around the world through Hyperloop. I mean, that's to me what they're pricing in, given that valuation. Price to earnings it's so unbelievably overbought right now. It's ridiculous. Now, I don't have the cojones to go out there and go full bore and short Tesla. But PE ratio tells me right now that people are smoking a big bowl. I see we have some weed references here in the crowd. I figure I might just join on the party. Someone's smoking a huge bowl here of hopium, expecting this thing to just keep on rallying. Now, that's not to say that Tesla can't keep rallying. That PE ratio is just a little bit unjustified right now when you're paying $800 per share and they're only making 52 cents per share. Though that's a disconnect to me. So to me, that's where I would look at something like PE ratio and go, wow, it is way overdone. And what's interesting is if we look at the universe of stocks right now, where do you think Tesla ranks? Let's say out of the top 100 highest PE ratios of all the stocks in the equity markets, where do you guys think Tesla is there? Is Tesla the number one highest rated PE ratio? Or is it not even close to the top? Where do you guys think? I'm just kind of curious. Patrick, smoking that hopium. Well, here's the difference, Naum. See, and it's I love that comment. Naum says Bitcoin is overbought too. I disagree. And the only reason I disagree is because First off, Tesla has a number of shares out there, and they can keep splitting their company. They've recently done a 5-to-1 split. Tesla right now, let me just go look at the exact number of shares here, and I'll actually share it with you guys so you can see. Tesla has, I think it's under statistics. Where is the shares outstanding? Tesla has 947 million shares out. So I'm going to round up and say that Tesla has a billion shares available. Here's the big difference now, and I hope that a lot of people get this, and it's a huge factor. Tesla could manipulate the number of shares, right? Tesla has done an amazing job of creating products and services, and there's no doubt there. Elon Musk is a master marketing person, and they've managed to drive that price way up. Bitcoin has a fixed ceiling of 21 that won't be manipulated. So you have a billion on Tesla, you have 21 million for Bitcoin. That's a huge difference. Now, everybody around the world knows Tesla. People around the world don't. I mean, Bitcoin is not as widely accepted as Tesla. I would argue that if as many people were aware and utilized Bitcoin as they did Tesla, Bitcoin would be $100,000, no problem overnight. So remember, it's not just the price that it's the fact that you think it's overvalued. You can't make that statement based off of a price. It's impossible to say something is overvalued off of its share price or coin price or whatever price it is. You have to look at how many of those securities or coins or shares are available overall, right? Because I remember years ago, Sprint was super, super cheap. And I'm like, people go, wow, it's a steal. And I was like, I forgot what the number of shares was, but Sprint had some astronomical amount of shares out there. So it's a common trap that people fall into. So just remember that one. If you ever say, wow, this is way overvalued, look at how many shares are outstanding. There you go. Cool. Big Eb says probably 18 million Bitcoin due to destruction. I would say it's way more than that, Big Eb. The numbers I've been reading show that 5 million have not moved from their address in, I think it was over 5 years. To me, if it hasn't moved in 5 years, you're either an extreme hodler or you're somebody who lost your private key and you don't have access to it. So yeah, what you have is the supply of Bitcoin, which was max at 21 million, is declining. At some point, there might only be 5 million Bitcoin out there, and you're going to have the world scrambling to buy those. So anyway, we won't go down that path anymore. I agree. Brandon says one day Bitcoin will exceed 200,000. I hope so, and I agree with you, and I put my money where my mouth is. I've got a bunch. I bought more today. Okay, so anyway, I wanted to go to that question. That was from Ethan saying, how do you use PE ratios to help with investment decisions? I don't. I feel it's way too easily manipulated. If you are going to be looking at fundamentals for a company, Colin Teddards at the Investors Channel, I think he does a marvelous job. Maybe I'll see if I can get him on the program again today to talk about Tesla's crazy valuation. But you really want to look at things like, what's their income stream look like? What are their products? All right, do they have a viable stable of asset or instruments that they can do to grow their earnings going forward? That to me is more important than a simple, here's their share price and here's how much they're making. Let's do PE ratio. That can be tweaked and modified by the number of shares available. Okay, what's our next question here? Next one was from, oh, there you go. That's me. Don says, I was reading up on chart patterns. Do you have a favorite? And I know I told you guys I was going to do a special show just on chart patterns, exclusively on chart patterns. I want to do that. It's just going to take me a lot of work to prepare that. So I did a real simple graphic here. The bottom line is done. And for everybody out there that's interested in patterns, before you jump on and you say, I love hammers, I love shooting stars, I love ascending triangles or flag formations, those are all great. They're simply names for a pattern of human behavior. So when you look at an ascending triangle or any of these ones, I want you not to analyze the name, but look at the chart pattern and say, what is that picture telling me? That's much more important than saying, oh, well, this pattern is historically bullish. Why is it bullish? That will make you learn it much faster. So let me show you what I drew out here. Apologize for my terrible graphics. And I'm going to quiz you guys on this too, so you guys feel free to get your fingers ready to start typing. I started off with this guy here. There we go. So there's, let's say price is moving up, and we have this pattern formation right here. Of course, you guys probably all know what this one is called. Of course, if you look at Brendan's channel today on Facebook, he actually posted one today, and this is definitely one of my favorites. It is called a cup and handle formation. I think that's a great formation. But bottom line is, why is this important? Why would you look at this pattern and say, oh, okay, it's a bullish thing? You can look at it from this perspective here. Let me see. I got drawing tools. My drawing tools aren't as good as Sam Evans's. But you notice that this low here, I'm going to circle it in red. Okay? We've got three things happening. You've got this high is remaining the same. And then you have this low being put in. And the next low is a higher low. So all this is telling me is that all things remaining equal, the sellers up top are selling at the same price. They're not giving ground. But the buyers are becoming more confident. They're willing to pay a higher price. They're making a higher low, which tells me that this is obviously a bullish sign that whoever's buying is feeling more optimistic and willing to pay a higher price. Therefore, this pattern is viewed as a positive pattern. I'm a big, big fan of it. Now, we can take this one step further and add in this guy. What's this pattern called? Anybody? Bueller? All right, we just went from that cup and handle formation. What do we have now? So notice that it's done at one time. It's called a double-fisted Starbucks. That's right. You see it on the screen there. Double-fisted Starbucks. All right. So you're making a higher low, higher low, higher low. This is basically just screaming at you that this thing is building strength and building strength and building strength. And I put double-fisted Starbucks on there. I'm totally kidding. It's really called an ascending triangle. Yes, Gary, Jerry, you guys got it. It's an ascending triangle. But remember, is it important to call it an ascending triangle, or should you more basically look at this picture and say, man, this thing is building and building strength. You can see it because and some people will draw lines across the lows here, whatever, who cares? Bottom line is it making higher lows? That's your sign of strength. And until it breaks as high, you don't want to be, don't want to be going along that one yet. Yeah. I had to throw out the double-fisted Starbucks just to keep you guys. I use a very simple longer-term patterns, triangles. Yes, and I think, Brendan, you're probably in the same boat. For the podcasters, I'll read Brendan's comment. He says, I use very simple longer-term patterns, triangles, cup and handles, head and shoulders, and the echo or capitulation pattern. Yeah, I think that what it's important is you're not relying on the pattern per se, the name of the pattern. You're saying, what does it mean? I can analyze this and discern what are the buyers and sellers doing. And this picture here tells us a very, very clear pattern. The sellers are holding their ground, which, makes you a little bit nervous, right? They've towed that line up there. Let's say that this is $10 up at the top. They've towed that line there. The question is, how do you end up trading this thing? Where's the best, most ideal way to trade it? And it's very subjective, right? I think that, let me get all ink. What I would recommend for anybody who's doing this, there's two ways you can trade these ascending triangles, and it could have been a cup and handle formation, whatever you want. It's the same basic thing. You don't want to buy it before it breaks above this horizontal red line. Why? Because the sellers haven't said that they're leaving yet. It's still a battle. I mean, this thing it's an ascending triangle. You guys can see that move up. Buyers are in control here because they're pushing prices higher, but the sellers haven't relinquished. As soon as they break and leave, if they leave, then all of a sudden, usually get a big pop here. There's certain ways to measure that, but anyway. There's two ways. You can trade it right on the break. That's a bit riskier, right? Because a lot of times you can get what's called a false breakout. Now, Jerry says, and this is the second way. So the first way is trade the breakout. As soon as it breaks above that line, and let's say that line was $10, maybe you've got to buy limit order in at $10.05, right? And you're buying that breakout. But a lot of times this could fail. So what you might want to do is wait for a retest of that level and then wait for things to rally up. That is more common. People wait for that retest of it. The only problem I have with that is if you're waiting for the retest, a lot of times it never comes, right? I've watched countless charts where it's broken through and just kept on going. I've also been involved in countless trades where it's broken through and then ripped right back down in reverse trend because people are watching these patterns and somebody with a lot more money than me can manipulate it. So anyway, that would probably be one of my more preferred patterns. Obviously, I love candlestick formations. This could be the exact same thing upside down. It's called a descending triangle. I'm a big fan of it. And the picture tells the story. So let's see what time we got. All right, I'll be able to get through all these questions. Let's see. Patrick says the retest never comes. Sometimes it does. But and you have to put yourself in this category. Are you being a little bit more cautious, or are you being really risky? That's what it boils down to. If you're really risky and you're one of the guys like me who says, hey, I've got no problem taking a risk because I'm not going to let it get away from me, then you buy the breakout, right? Then you don't have to worry. And maybe on the retest, I will add some to the position. If you're a little nervous and you want to be a little more careful, you wait for the retest and let it prove to you that area that was your supply level at $10 is now going to be a demand level at $10 as well once it breaks through, right? All right. Let's see. I was going to show you. Oh yeah, I was going to show you a resource which I love. I've used many times. Oh, and I got two things I need to cover. See, I start talking fast and I'm losing track of things. FinViz is a great resource for you guys. I would definitely recommend you use FinViz. There's I'm not getting paid or anything from them, but I think it's just a great resource. There's a lot of great information at FinViz, and one thing that you can find here is you scroll down, and we just talked about descending triangles, right? Well, notice right here, it's giving a list of descending triangles. So let's check out what they say are descending triangles. Most of the time, they're crap. I'm telling you, most of the time they're crap. I actually see two good ones, okay? Now, before I go and show you which ones are the good ones, I want to... Come on, Merlin. I'm trying to turn off my screen here. I want to draw one more thing. And that one more thing is this. There is a belief system that once it breaks out above this, let's say it finally breaks through, there's a belief system that you can calculate how much it's going to move, and that's called a measured move. What you do is you take, let's say this is our triangle here. We've got our ascending triangle. You would take the distance from that top point, which is B up here, right? And then calculate to the lowest point of the triangle, to there. So in theory, it should move this distance, that vertical red line I drew. So once it breaks, let's say this was a move of $2, right? Then this should move up $2. That's what a lot of technical analysts believe. I don't put all my eggs in that basket. I think it's a little bit subjective. But anyway, it's a good way to estimate where it may go. And if I calculate that this thing's going to move $2, and let's say that's right up here, and that lines up with an old area of supply, well, I'm feeling much more confident about that trade. Okay? Are you just looking at price action after the initial drop off the cliff? Are you asking me? Or are you Tilray? I think you're talking to Brendan. How do you let it prove that to you? It could come back and retest and keep going. Yes, Walter, absolutely, right? Remember, nothing is 100%. And that's a great point. Let me erase this again. So we've got the break, right? And let's say it bounces up and you missed the initial entry. You just didn't want to jump in. You were a little bit conservative. You said, okay, I'm now going to use that $10 mark as a retest point. And you're right, Walter. It could come down here and this just straight rip down and just disappear. But that's a risk we take with every single trade that we make, right? It could just keep plummeting from there. You have to buy in at some point. You have to put your fear aside and say, okay, I'm either going to buy on the initial break or the retest. Either way, you're going to have a stop loss in here. My logical place for stop loss would be below one of the tips of this triangle, somewhere like here. So let's say that's $9. Okay, I'm risking $1. Is it worth it for me to take this trade? Well, my target better be $3 or $5 or $10 worth of profit. Okay, does that help, Walter? Hopefully. All right, what else do I got? Patrick, are you just looking at this EMA? What RSI? Okay, no problem. I always think you're talking to me, so I figured you're probably talking to Brendan. All right, so that said, since I talked about measured move, which is that distance from the peak of the triangle or the lowest point to your baseline here, what they'll call a baseline or neckline, let's look at what I pulled up through FinViz just to give you some ideas. So look at this UNFI. Not bad. You guys can see it's kind of been towing that line. It's been bouncing off it a bunch, but it has been making lower highs, so it's getting weaker and weaker. But this target is kind of ridiculous because the same measured move I just showed you would make it fall from, let's call it $15 all the way up to 22. That's an $8 or $7 move. That means this thing should drop all the way down to $8. I don't know about that. And I don't usually like shorting any stock that's that cheap. This one on AYX, this actually looks pretty decent. This might be something you guys want to keep an eye on, AYX. I don't know much about it. It looks like it's relatively thinly traded. But I think you guys can see It's making these lower highs, lower highs, lower highs since June, since July, but it's been kind of basing right around, looks like $105. Well, maybe if it gets below 100, there's your short entry. Look at JMBS. That is not a descending triangle, guys. I don't know. I don't care what they're telling you. That's not a descending triangle. So a lot of these are going to be garbage. Wix isn't bad, but my line wouldn't be right there. My line would be lower. So anyway, I like these filters because it gives you some ideas, get a little bit of potential investment ideas. Let's go to ascending triangle since that's where we just were. Ooh, cow. Cow looks good. Cow looks like it almost just broke and just did a retest of it. Well, cow might actually be a decent buy right here at 34, right at $34 because it's still hitting that upward trend line on COW. What is this? Oh, it's a livestock ETF. It's going to be extremely thinly traded, guys. Very, very, very thinly traded. Anyway, thought you might like that as a resource, but you guys can see some of these pictures are clearly not ascending triangles. Whatever program they're using to automate this decision looks crap to me. All right, I will try to filter through. So wouldn't buying the breakout be just as risky as buying the retest? Yes, they're both, I would say yes, Walter. They're both equally risky, but I think what a lot of people are fearful of is that there's a higher probability of it moving up once it retests and bounce off. That's just the general belief system out there. I don't know, I have to look at the books by Bukowski who tests all these theories. But to me, I like buying the breakout too, the initial break. Bottom line is, if you have good risk management and you know you're going to stick to your stop loss, it doesn't matter. Buy the break, buy the retest, buy the break, add on the retest, whatever you want. That to me is a better way to go. But it all boils around this presumption that a lot of people are weak with their discipline, their stop losses. They're not using stop losses and stuff like that. All right, good. Questions on that? Anybody else? Okay. I got the retest question. The market is crazy when Elon mentions use. Oh, yeah. That was crazy. So, since you mentioned, I got to bring that one up. And this is why I believe the market is ridiculous right now. And this is Robinhood traders just sitting on Elon Musk's tweet. Tell you what, if I'm Elon Musk, I got to be looking at this going, you know what? This could make me rich. If Elon made some deal with, you have the symbol in there, SIGL? I'll bring it up here. Oh my, are you kidding me? Wow. It's up 400% today? I thought they would stop this thing. Wow. Wow. Anyway, here's the picture, guys. So Elon Musk tweeted out that people shouldn't use, I don't know, one of the, was it WhatsApp? And they should be using Signal. Well, basically all these traders, I can't even lump them in the word of traders because to me they don't know what the hell they're doing. They were just scrambling to buy whatever he said. They ran out and bought this company called Signal Advance, which, and here's why it's moved up so much. Because you have so many people following what Elon Musk says. Its average daily volume was 6,000 shares. You guys can see down at the bottom, this blue line is its average daily volume. You see some days where it didn't even trade. 5,000. There's a blue number in that box. I know it's hard to see, but the very bottom blue number tells you what the average is for that day. But, it's trading 5,000 shares a day on average. That's nothing. And then all of a sudden, Elon tweets about it, and everybody and their mother goes to try to buy 1,000 shares of it. It just goes crazy. Yes, Patrick. Not traders, Robinhood hooders. Absolutely. This is a great case for being short, but there's no options on this thing, right? Yeah, 2.3 million shares traded today of something that barely trades. This is the dream come true if you were a Signal CEO or anything like that. Honestly, if I was a CEO and this happened, I am unloading every single share I have. Yeah, and so Brennan says, Merlin, this bodes extremely well for whatever decentralized social media platform can capture the masses. Exodus will eventually ensue on Facebook, Twitter. Well, look, I steer away from making any political comments. I don't want this to be a political show. And it's not a thing about Trump or any other politician in particular. But if somebody is using these social networks in a way that's inciting violence, that's used to, you could say hate speak on it, they're going to shut you down right away. But unfortunately, we have so many people in this world that are ignorant and are uneducated, and they believe everything that they read, and they'll look at somebody's Twitter post or Instagram post or whatever, and they'll get manipulated by that, And all of a sudden, you have a standing army of people who just don't know all the facts that are presented to them, and I think that they're making bad decisions. So these people know that, and the ability to use social media for bad, part of me, I agree. I think it should be free speech. You should say what you want, but if you're gonna allow somebody who has millions and millions of followers to say insightful things that will lead people to beat a police officer to death on the steps of Congress, you need to be shut down. I'm sorry. I know there's freedom of speech and all, but, anyway, so you're getting me backed out. And here's what's interesting to Brendan's comment. With that said, once these decentralized networks, which is what Bitcoin is, and Ethereum to some extent, it's still somewhat centralized, you have the ability for these networks to thrive because you cannot shut them down. You wouldn't be able to censor. Of course, if you wrote in the code of the decentralized network that you can't do these things and these things, it would automatically shut them down, and I think that would probably be the better thing to do, as opposed to arbitrarily selecting individuals like Ron Paul, like Donald Trump, and saying, we're banning your Twitter account. Yeah. All right. Let's see. I 100%. I think that I'm watching it with embarrassment as my friends from around the world are messaging me going, what the hell is going on with America? You guys, you look so stupid right now. I know. Hopefully we'll get past it and move forward. Let's hope that the dust settles on this one. I think we're all above this and better. So anyway, let's not go down political route. Let's go to some more questions. I got a few more here. Ascending Triangle. All right. On this note, this is one that has been an extremely hot topic, and I don't want to go too in depth on cryptos because I know we did a whole bunch on Friday's show, and I don't want to steer the show that way. Sam says, I received notices from Coinbase about suspension of trading on Ripple after January 19th and would love to hear your thoughts on the future of XRP. I held some for about 2 years and sold it a few months ago and went to Bitcoin, but I've considered rebuilding a position. I think you're dealing with one of the riskiest ones out there, and there's many reasons why I think that this thing is dangerous. I do have 22,000 Ripple, something like that, still in my account. I sold off a whole bunch of it at 63 cents. So I was pretty happy about that right before that big crash, but I'm still holding quite a bit. That said, I'm keeping it there kind of as an experiment. I think that there's potential. I think there's if Ripple can do what it wants to do, which is to be the payment network for financial institutions, they without a doubt would do a better job than Swift. So Swift is this old school legacy system that banks have been using to send money around the world. It's slow, it's cumbersome, it's way too tracked, right? There's too much hands in the kitchen there, and of course the delays on it could be 2-3 days before you get your money. To me, that's a slow, archaic process. It's like the horse and buggy, and I look over here and I've got bullet trains. Now, bullet train would be something like Ripple. If they can get in there and replace that system, then I think Ripple's got a tremendous, tremendous shot at being something good. I also mentioned that Ripple has 100 billion coins available. Only 45 billion are in market right now, which means 55 billion, over half, are still on the shelf. Meaning if they decide to sell that 55 billion shares of Ripple, or coins, tokens, whatever you want to call them, Ripple's going to plummet much further. You think 32 is a good buy point, you might be getting it at a nickel. So I think it's got a lot of problems. What is interesting about this, and for all of us who are in the crypto space, I think this is one that we all want to keep your eye on. Even if you think it's junk, Big Eb, you want to keep your eye on Ripple, because what's going to happen is somebody's going to be made an example of. And I think, you look at what happened at Online Trading Academy. I think you look at the trading education space. I think the FTC was trying to make an example of somebody. And unfortunately, I think they picked on the wrong guy. I think that there's so many other schools out there that are just absolute charlatans and don't provide any value. Whereas I think OTA provides tremendous value. And of course, yeah, it's expensive. But there's a lot of things to it that you don't get anywhere else. Massive support, community, all types of things. Anyway, if you look at what Ripple's doing, the SEC, I think, is going to try to make an example of Ripple and say, okay, we now have our fish on the hook. Let's go after Ripple and see if we can take down this crypto space. Because I assure you that there is tons of political pressure on the SEC to do something about this rampant virus, which is crypto. Let's kill it. So I think they're going to go after Ripple, and I think they're going to try to make an exception out of them, the exclamation point on their case for cryptocurrencies. But remember, it's got billions of dollars. Ripple's not going to roll over and play dead here. So I think, again, they picked on the wrong dog. And the outcome of this could be a precedent. It could be a court case that sets the whole tone for the crypto space going forward from a regulatory perspective and much, much more. So I'm not that bullish on Ripple. If I had to choose, I agree. Some like with Big Eb says here, I would definitely rather put my money in something like Ethereum. I put my money in Bitcoin. I just bought some more today. Ripple to me would be part of the speculative or gamble portion of my portfolio. If I was an analyst, I would have downgraded EOS. You guys remember I had a pretty good position in EOS, but Dan Larimer, who's the guy who is basically the code genius behind this project and many others, he just resigned today. So, of course, EOS is down big. I'm debating unloading all that position too. So you have to kind of always be looking at the risk reward here. EOS I thought was a front runner to take the lead and maybe potentially even replace Ethereum. But now with Larimer leaving, I see lack of leadership there. That one's probably going to end up tanking as well. So Ripple, speculative one for me. I'm going to keep my 22,000 of them, but I will not be buying any more. If anything, I might actually be unloading it. So anyway, there you go, Sam. That's my take on it. Any others in here? Some others may disagree with that. That's fine. Do your own research. I think it's important, but I think that once we get to court, Brendan says Ripple Labs is a pretty powerful entity with a lot of corporate partners globally. Exactly. Right. That's why I said I think the SEC may have picked the wrong fight here because not only do they have billions of dollars, right? They have billions of Ripple. Let me real quickly just do. Where's my calculator? Let me do this real quick in my head. So 55 billion times that by what's it? 32 cents right now. That's $17 billion. They have $17 billion essentially to fight this. And I'm sure they would go $1 billion or $2 to fight the SEC. No problem. Let's bring in the top-notch lawyers. When you have money, you win court cases. Even if you're guilty, OJ, you got money, you win court cases. And when you got $17 billion, I'm pretty sure they're not going to lose. Okay. IOTA is another one that I think is extremely speculative, but I remember I like their model. I like the idea. I'm going to geek out here a little bit, but it's called a directed acyclic graph, the DAG. And to me, that is an interesting backbone architecture, right? Bitcoin right now is proof of work. It's kind of a cumbersome process. Ethereum is switching to proof of stake. Well, DAG is a different one that the more people get involved with the network, the faster and more efficient it becomes. So not only is it scalable, it's encouraged to be large because it gets faster and more efficient the bigger it gets. So I kind of like the idea. Mechanically, it still kind of confuses me on how it all works, but anyway, it's a crazy world out there in the crypto space. Tons to look at. All right, what else do I got? One last one, and I apologize, Otto, for the delay on this one. Otto sent this one in last week. He says, on the daily chart of XC, which is core and futures, a decent shooting star formed on January 6th. I will bring that one up for you. Let's bring up I'm going to do it on Trading View because that's easier for me than TradeStation. 1 second here while I bring that one up. So why I should not have had 3 browsers open. Should only have been 2. All right, so here is your... Perfect. So here is corn. Now, the candle he's talking about is where my cursor is at. I think I might be able to just do a little annotation here. Let's see if I'll hide it from you guys and see if that works. Perfect. All right, so on the hard red edge of this chart, this is when he said, you can see that a decent shooting star formed on January 6th at the end of an uptrend, and I took E-mini contract short on January 7th after price broke through 491, the bottom of it. Right there, Otto, I would say great. I think that's a great idea. That's a great shooting star formation. The only problem is I would look for 2 things to make it better. The first one would be I want to see that body on this shooting star red. So here you see it's green, guys. I'd rather see that red. And then number 2, down here at the bottom, I would much rather see volume really high. When volume is, 2-3 times normal, that is one of those, that would be like, oh, hallelujah, hallelujah. I mean, that's a great pattern. Unfortunately, it didn't have those 2, but you can still trade it the same. And you said that you traded on a break the next day, just like I would have done right there on the break down below that blue line. Okay, he says it broke shorted once it broke below 491 with a stop above the top at 503. Okay, on January 7th, the candle formed a hammer-like pattern. So what you're looking at the next day, it's a hammer, but it's called a hanging man. When it's up that high and you get that pattern at the top of an uptrend, it's called a hanging man. It's actually supposed to be a reversal pattern, but honestly, I do not like them. I'm not a fan of hanging man patterns. I never look at them. He says, question, does the formation of these two candles in succession negate the trade I took, or what is your view? To me, it definitely, it kind of erases the shooting star because it already sold off, right? It sold off and then it came back up. So going forward, I would still, have my stop loss in place on the initial trade that you took on that shooting star. But I'd be moving my stop loss down because it didn't have follow through. I would have expected the next day to have a little bit more follow through, close red and down for the day as opposed to this hanging man formation. So anyway, that's my take on that one, Otto. I apologize for the delay, but I think that overall you're probably in a decent trade. Today's activity was great for you. I would be moving that stop loss down to lock in some of this profit because if it bases and goes sideways, so you can see right now, it kind of feels like it's basing. If that happens for another day or two and doesn't drop much more, then that's a sign of strength, right? A big rally usually is followed by a decent pullback. But if it bases, then the probability of it moving to the upside is increased. And you can see this thing really rip to the upside, and that would probably not be a good thing for you. Okay, I think that does it for my questions. Yes, it does. What are the questions you guys have for me? I'm going to real quickly see if I can look through here on the futures or any questions. I know you guys have some good conversations going, so I'm going to try not to read all those ones. But, all right, well, if you guys have any questions, let me know. I will answer those as we go through here and as we wrap up because I noticed the time is getting short. Now, for tomorrow, I didn't make an economic calendar. I just ran out of time. For tomorrow, you don't have too many huge things. You have some good stuff. You have JOLTS job openings. The 10-year bond auction is probably the most anticipated thing tomorrow. And again, we've been seeing the 10-year note sell off aggressively. That means those yields are rising, and that's the expectation that it's probably going to continue to rise. At this point, it doesn't mean much. But we've gone from 40 basis points, so 0.4, to 1.2%. What happens if we get to 2%? What happens if we get to 3%? Then all of a sudden, that 30-year fixed mortgage is no longer going to be sub 3%. You'll be looking at 4%, 5%, which is still historically low for real estate, but it will price some people out of the markets, which could start to slow things down. That's just one of the ways to look at it. So that's what's happening tomorrow. What else do I have for you? NFIB Small Business Index, which is expected to drop a little bit. Of course, the reason that one's so important is because that represents the Russell 2000 small businesses, and Russell 2000 has been on an absolute tear lately. All right, that's it. Earnings-wise, it's a dud. It's a boring week. There's not a lot going on, but you will see on Friday is the mother of days of earnings season. It's the kickoff officially to earnings season. I believe we have JP Morgan, Citibank, and Wells Fargo all reporting on Friday. That will be the big one. CG says, do you see any businesses adopting crypto, or do you see it as just something cool that traded like it is currently? Okay. Thank you, CG, for saying that. I love that you said that because I asked you guys a question earlier, and I forgot to answer it. I asked you, where do you think Tesla is on the most valued companies, right? With regards to PE ratio. Is it near the high? We mentioned it's like 1,700 right now. 1,700. So let me show you that one here. I want to bring up the results. We'll go full screen. And I'll go to FinViz. FinViz has a great screener, by the way. I almost feel like I should get them to sponsor the show. Wouldn't that be nice? So I clicked on screener here, and all I'm going to do is go to fundamentals. And right now, it's going to search 7,577 stocks. So that's a pretty good sample, right? And I'm going to go here and click on PE ratio. And I'm going to do... Actually, I don't need to do anything. I'm just going to double tap on the top of the column. And look at this. Vericel Corporation has a PE ratio of 34,890. Wow. Tesla is on the list, but it's number 20. It's actually dropped a little bit today. When I looked at it, it was 1,700. Now it's 1,600. Oh, it only dropped 150 points. It's number 20 on the list out of 7,577 securities. Tesla is number 20. And you notice there are a couple other big names here. And what's nice is the question that just came in from CGE, which was, are companies getting into this? Are businesses getting in and adopting? Well, look right here, MicroStrategy, MSTR. Right? MicroStrategy right now has a PE ratio of 4,346. You're like, wow, what does MicroStrategy do? Well, MicroStrategy, interestingly enough, I'll bring it up over here, holds $1.5 billion worth of Bitcoin. So, of course, now they're actually more tied to Bitcoin. It's almost become a proxy for Bitcoin. So if you want to buy Bitcoin, you could, instead of buying GBSD, you could be buying MSTR. They have $1.5 billion worth of Bitcoin, and they have other cryptocurrencies as well. So as far as adopting CG, yes, more are adopting and allowing transactions, but that's a slow process. What's interesting is now you're seeing companies, instead of holding US dollars, which are just dropping in value, right? Let's go holding billions of dollars in cash, which, as you guys can see from this daily chart, you're losing money. They're holding Bitcoin and buying different cryptocurrencies to hold. So to me, that's a very interesting paradigm shift that we're seeing happen right now, right? So companies are utilizing it more. It's still nowhere near, the adoption rate that I would like to see it at. I mean, I'd love to see it just commonplace, where if I go to buy anything, I can select different cryptocurrencies. And I think that will be down the road, but they're still working out the kinks of scalability. Which one of these cryptocurrencies can handle transactions at the scale of Visa? None of them can right now. So hopefully, Ethereum with Ethereum 2.0 and sharding and these different technologies they're using will get them scalable so they now can go mainstream. If that happens, that's really where I'm focusing my attention on, is which one will be the transactional Visa. Visa's going to make their own, but hopefully not. Patrick says, do you use FinViz for your own trading? Sure, I do for my analysis. I'm always looking for things. Just sometimes when I want to go find patterns, I'll go through FinViz. It's just an easy screener there. And you saw there was a whole bunch of different ones, and Head and Shoulders. Merlin, how would the SEC figure out who is behind a coin? Who would they charge or call to testify for Bitcoin? Well, for Bitcoin, it's a decentralized network, so they really couldn't call anybody. I guess in theory, you could say there is a Bitcoin organization, which is, I guess you could say, administering it, but they're really not. It's open source, right? It's an open source code, so they wouldn't call anybody to testify. It's like Brendan says, it's decentralized. So that's why has such appeal, because you can't shut it down. They can't confiscate my Bitcoin. Well, I mean, they could if they had my private key. They can't get it. But your bank accounts right now, they can confiscate that, snap of the fingers. I mean, personally, those guys that were in there, storming the Capitol with handcuffs and firearms, saying hang Mike Pence and kill Pelosi, you know what? Hit a button, their bank accounts are frozen. Of course, you gotta love the QAnon guy, who's supposed to be some QAnon celebrity, and he lives at home with his mom and is basically got nothing going on for his life. Hey, you know what? Let's just be an insider of violence. That's great. Anyway, sorry, no politics. Jonathan says, Merlin, have you heard of the shell company named Jade Art Group? No, I have not. Whereas they might be the ones bringing Coinbase to its IPO. Really? I'm surprised that they would not be going to a bigger firm. I mean, knowing the amount of potential capital and money that can be raised here, you mean from as a SPAC? Is that what you're asking, Jonathan? That might be. I haven't followed it, but if I'm kind of feeling like if I'm Coinbase, I might want to go the traditional route. I don't know. You could do it through a SPAC. I'm sure they're being suited right now. I mean, there's a lot of people coming up to Coinbase as a SPAC on, we want to buy you. Come on. But I'm sure that price is going to be pretty high, and I hope it does happen. Oh gosh, yeah, Skrelly, that guy. All right, guys, that's going to do it for me for today. I have a very full schedule for this week. Today was the only day I didn't. I wanted to kind of keep today clear because I just had a bunch of questions I wanted to get through for the viewers. Tomorrow we're going to have Corey Lane on the program, so we'll be talking options. I know there's been a few questions already sent in asking Corey Lane about specific pieces of the market, so we'll do that. Wednesday, we're going to have Sam Evans. Thursday, I've got Bob Dunn. We've got a pretty big slate of great traders on the program for this week. So I'm pretty excited. Again, you guys always have the ability to steer this show down an alley or a way that you want. So let me know if there's specific things you want me to cover tomorrow with Corey Lane. You can send that in at tradermerlin.com or just go to, just email me. I think I actually have it right there. tradermerlin@gmail.com. That's not the date. See, this is what happens when I just don't do the show on time. We are on the 11th today. There you go. See, fix that right there. You can email me, tradermerlin@gmail.com, as many of you have been doing. I appreciate that. Sorry if it takes me so long to get back to you, but I got a million things going on. If you like the show, click the thumbs up. Till then, happy trading, everybody. I will see you tomorrow for another great session. Take care.